Good afternoon, outliers. Man, doesn't that just make your day? I love that so much. And I love the fact that I get to hang out with you here this afternoon with Jonathan. Let's go, Chris it up. You don't have to Chris it up. I see Ian twice in a day. What's going on, my friend? Good to see you. Matthew, what app do you use when you're explaining the three trend lines? Well, you can use any charting software. Let me show you what I mean real quick. Great question, Matthew, and thank you so much for coming today. So these three trend lines, it's the 10 over the 20 and price over the 50. These are all EMAs, 10 EMA, 20 EMA, 50 EMA. This is what I call the outlier trend template. Now, honestly, I didn't come up with this. I got it from my friend Steve Burns in his very excellent book that I highly recommend everyone pick up called New Trader, Rich Trader. And then, of course, I stole it and called it the outlier trend template. That's how it goes. But yeah, you can use any charting platform, honestly. I would encourage you to go check out Outlier. Shameless plug right now. I would encourage you to go check out Outlier. We are building more enhancements into Outlier in a very near future. But you can actually add the 10, 20, and 50 EMAs right there on your Outlier charts. But to that question, there you go, Matthew. And thank you for coming today, my friend. Federico, good to see you. Eric, what's up? Yornish, how you doing? James, good afternoon. Use the Outlier guide, saved $250 on one trade. Yes, it is worth learning. Outstanding, James. Congratulations. Screech is back from the dead. Good to see you. C-Mac, Peregrine, Pick J-Mac is here. How you doing? Steve, good evening, Outliers. Mikey Mike is here. Megatroy, happy Friday. Van Man lives in Florida. I probably won't see you, Van Man, but you might run into me next week. It's very possible because I will be on spring break next week, so there will be no live streams. However, I have been recording videos to come out twice a day next week. It's different, right? Having somebody here to talk to makes the energy so much better. It makes the content so much better. So it's probably going to be the worst episodes ever all of next week. So just let me know how awful it is. Architect Ray, what's up, dude? Good to see you. Shane, Rob is here. Philip is here. Faulty? I don't know. I think it's faulty. Good to see you, Philip. Andy, good afternoon. Dustin, Darren, ready for more? Dude, glad you're back. That song is a banger. I love it. Happy Friday, Lars. Amen says, what's good? Mr. Market cries, feed me today. The market's rip-roaring higher. Did I call it or did I call it? Did I call it? Did I say look for a short-term bottom? And I think we're going to see a lot of short covering. And right at this order block. Wow. It's almost like I know what I'm talking about. Wow. Now, of course, I wouldn't put any money on that because that's not the way that I trade. But if you did, listen to what I said, you probably made a couple bucks. So I'm happy for that. Knight is here. Senior Wahoo is here as well. Good to see you, my friend. Andy says, my old trade habit, trying for a return. Resist and plan. Resist and plan. That's right, Andy. Just plan. Plan your trades. Only price pays. Dustin, today was not a monkey hammer day. No, it was a monkey rocket ship. Yet, says Dustin. Charles, happy Friday. Dave says, it's so good. Philip, my 9-year-old just started bopping to the intro. Yeah, let's go. I need to get my 9-year-old to do that too. His birthday is next week in the middle of spring break, so we're going to surprise him. He has no idea. When he comes home after school today, Dad took care of it and got him a buttload of presents because we're going to be gone and we're clearly not taking presents with us. So he has to open all of his presents on Friday night. And then Saturday morning when we leave, he doesn't get to play with any of them. Torture. Dr. J is here. Georgia, how you doing? Twice in a day. I know. Just making money says good afternoon. And NASQ's here. That song slaps. Gonna make it my ringtone. Hey, you'll love this. Sunday, the Sunday video that comes out will be the song. Thanks to Martin Davidson for allowing us to play this and make it our own. The Sunday video that comes out will be our song. It'll be our song. So save that video, listen to it forever, for sure. Mr. Deezy, howdy, chat, and Chris, good to see you. Skinny Buff Guy, gotta cut it short today. The girlfriend says Friday hour takes priority. Dude, as long as you're having Guinness, I'm on board with that. Hey, your girlfriend, you're trying to save some money and make some money too. Ranjit, good to see you, my friend. Glad you made it. Shoy made it again. Finally made some money today. OPP, use the 10, 20, 50 to sell. Shoy, I'm so happy for you, man. I know that you said that we had some issues over on AMD, but dude, congratulations. Now, Shoy, the way you can pay me back is you tell everybody you know. That's all I ask. Just tell everybody you know. Augie's here. Scott, you're welcome, my friend. You're welcome, Scott. I love you, man. Huey's here. Good afternoon. Happy Friday. James, Megatroy, Central Florida. I'm not going that far. I'm not telling y'all where I'm going because I don't want y'all like creeping on me. Just saying. But we're going to Florida. I'll put it that way. Guinea pigs are cool. Says howdy Tejas. You know your show is twice as good because you're from Texas. That's right. In fact, I had a Coke Zero today in my Texas flag koozie. I haven't got a Texas tattoo yet, but I really do want to. So bad I want to get a Texas tattoo. Born and raised my whole life, my friends. Mari, hi over the air from Anchorage. Oh my gosh, Mari, I am very, very honored that you would listen to us on your flight. Be safe. Be safe. Superfly says, ciao. Stella. Nico's here. Kleptomaniac. Richard, a few minutes late, but better late than never. Good evening, everyone. Rick, I did make a couple of bucks on the bounce. Position size was very small. And that's okay, dude. As long as you keep your risk in check. And Georgia's right. That was Elliot's birthday. His birthday is the 19th. Georgia, I am very impressed. My older son's name is Colin. My younger son's name is Elliot. Has nothing to do with Elliot Waves. We just like the name Elliot. Thank you, Georgia. I'm really impressed. Alex, good to see you. Ciao, Italia. Dan is here. It seems there will be no short option today. And that's okay. That's all right. It's not about making trades every day. It's about looking for opportunities, following your rules. In fact, some of you have never heard of Richard Dennis, but let me explain to you who Richard Dennis is. Richard Dennis is famous for being one of the greatest traders ever. I think by 29 years old, he had made $290 million, something like that. It was crazy in the market by 29. That was 10 years ago for me. I didn't even have 29 cents at that point, right? Not compared to him. Dude, 29 years old, $290 million. I wish. But this was his rule. He created the Turtle Traders experiment. He said, I always say you could publish rules in the newspaper and nobody would follow them. The key is consistency and discipline. And here's the thing. Consistency to show up every day. Consistency to look for new opportunities every day. And the discipline to know when those opportunities are right. The discipline to know now's the time. But you got to have the consistency and the discipline. That also reminds me of a quote. I just read it this morning. I don't remember where I heard it from. But this person was saying, knowledge is knowing that a tomato is a fruit. Wisdom is knowing not to put it in the fruit salad. Right? It's kind of like that. Thank goodness it's Friday, Wes. Good to see you. What's up, Brian? A NASQ made some money today for the first time. Dude, congratulations. That's awesome. Mr. Vlad is here. Good to see you. Luca Tubo's here. I hate order blocks. Why? Order blocks, dude. And we will have them in Outlier soon. And we will call them outlier blocks for the history of time. And people are going to be like, where do I get outlier blocks? And you're going to say outlier. That's where you get outlier blocks. But, bro, could you imagine how much more money could be made in the markets if people like actually could see order blocks like this, like we do? Now, I use TrendSpider to see this. I think Steve Burns was the one who told me about order blocks. And I never believed in support and resistance in the past. I'm telling you, like, I thought it was one of those like hocus pocus, like stupid things in the market that people believe. But now order blocks, now that we can quantify where the support and resistance is at, it's not subjective and it gets painted on the chart and I don't have to stress on it. And I don't have to come up with it and say, maybe at this point right here, it'll bounce. No, just look at that. Bounce on city. That's crazy. Let's see. Rob, are you going to the new Epic Universe Park? I'd love to see that place. I will at some point, but not this week. Shui, you're welcome, my dude. You're welcome. Keisha, a few minutes late, but she's here. I'm glad you made it, Keisha. Axel, what's up? Give me those 2004 vibes. Wait, what's giving you 2004 vibes? Man, let me tell you, 2004, that was the year I graduated from high school. I met my wife the October that I started college. She locked me down. And this was October 2004. She said, I will not let that guy out of my life. That was a good choice on her part. I'll put it that way. That was a really good choice on her part. What else happened in 2004? I don't know. All kinds of cool stuff, right? Any outlier blocks on GDX? Let's double check real quick. We're going to sneak a GDX in real quick. Just real quick, right quick. Dude, it just blew past an outlier block. It just blew past one. And tell me they don't work, right? First time I came up into here, rejected. Second time, rejected. Third time, rejected. Fourth time, it took enough to get through. By the way, GDX is on my shit list. This was one of the ones that helped blow up my account one time. Shout out to Jim C for sharing your channel. Jim C is a rock star. Everything is green. Let's go. Nico Turtles. Yeah, the Turtles is awesome. Wifey Joe says, wifey was worried about some stock market gloom in the news. I told her we're up 15% due to outlier, and I sold it all before the downtrend. Joe, there's a fist bump through the computer right there, straight to you. And then you tell your wife to tell all of her girlfriends that they should probably watch us out on Outlier as well, because like our demographic is becoming more female and less male. We were at 92% men and then 91, and now we're pushing 90. So I guess we can let a couple of girls come every once in a while. None of you says, what is your take on qubits when it comes down to the $5? We're all taking the company. First off, first time I heard of qubits was this morning. QBTS. I don't know why people are talking about it, and that's okay. I don't need to know why. In fact, if you go to, I'll show you where to go exactly. Let's go over to YouTube's, and you type in my name, because this isn't on the Outlier channel. Christopher Ewell. And then you go over to my channel. Then you go to playlists. And then you go to this Market Wizards playlist. And then you go to this interview I did with Tom Basso, one of the Market Wizards right here. I had that conversation with him. Specifically, it's in this video right here. I said, Tom, I just bought this stock. Never heard of it before. And he's like, that's cool. No big deal. I do that all the time. Doesn't matter to me. I'm like, what do you mean? And he goes, only price pays. I don't think he specifically said that. But basically it was, if the company is moving up, if the price is moving up, that's all that matters. In fact, let me see if I can skim through this and see if I can find it real quick.
You don't have to work very hard to try to make money and to be aggressive in terms of going after the profits. You need to protect against the times when it's going to clock you and you're going to be out of the game. So if you can protect the risk and just wait for the markets to do what they always do, sooner or later, make a move and exploit it, then you're golden.
Wow. Podcast name, by the way. Doesn't that sound exactly like how I talk? Market Wizard Tom Basso saying, trade risk first, wait for opportunities, and then when the opportunities come, go deep. That's so funny. That's so funny. Hang on, let me see real quick if I can find what I was looking for. Search trend. Oh, I can't search this. I searched it this morning. Why couldn't I search it this afternoon? Okay, never mind. Anyway, fantastic interview with Tom. I would highly recommend you go watch that. Let's see if I can come to it.
Found helpful along the way, because I mean, you think about how blessed we are today. You know, it's like back 100 years ago.
Book, for instance, and picked up some ideas from Larry Hite, actually, the chapter on
Larry Hite, another one of my mentors.
Larry Hite gave me some ideas about risk control, and later on, after the famous silver trade I went through that was in New Market Wizards, I created the math for TrendStat's volatility controls, and that was really instrumental in helping TrendStat be a little bit more of a smooth operator over the years. Chance somewhere around 60 to 70 of picking up that premium versus taking playing screens like you do now.
Right.
So lay those down on the floor and then stand up. And I'm sick.
This is really good. I forgot about this. I'll go back. This will be the only clip that we play, and then we'll get back to it.
We're, as an engineer, trying to figure all this out. There wasn't, well, I assume, was there literature out there on the trend following tactics and strategy, or was this something you developed through trial and error?
I tell you, the way I did it, it was very strange, but I had point and figure charts of about 10 or 15 different commodity markets. So I had corn, and I had wheat, and I had live or lean hogs and live cattle, and gold, and a few other crude oil. And what I did with those hand-drawn X's and O's if you've ever looked at a point and figure chart back in the old years before computers, that compressed a lot of information down into one piece of paper because you didn't have scrolling screens like you do now.
Right.
So lay those down on the floor and then stand up. And I'm 6'3", so that's a long way from the floor. And you just look down and you immediately can see that, oh man, I wish I'd gotten that corn trade. That'd make my year right there. Big long run. You can just spot it from a distance. And boy, that crush in gold where it just fell off the table and went down hundreds of points or thousands of points. That's another one. I'd love to be short gold during that move right there. And that's kind of what led me to trend following, because I figured out I've got to figure out how to capture those very long runs. And the rest of the stuff, I just need to stay out of trouble. Just need to, sit tight, not do anything, hopefully not get whipsawed too much, although I didn't even know the term probably back then. And that's led me to, how can I make sure that I'm going to always catch every one of those big runs? And trend following is the math that you end up with.
Isn't that funny? Isn't that funny? Most of you outliers totally get it, and I'm really grateful for that. But for those of you who don't get it, like he's saying, take a chart, zoom all the way out. Zoom all the way out. Right? Imagine being 6'3" and then even standing on top of a desk. I remember Larry Hite saying that. Standing on top of the desk, looking down at it. And you're like, huh. I wonder where a good place to get in would be. Would it be over here? Would it be here on its downside? Probably not. Maybe, you know what? Here would have been really good. What's different about this than maybe this side? Huh. And you could zoom in a little bit, jump off the desk and maybe pick it up. You're like, well, that's interesting. The moving averages, the 10, 20, 50, every once in a while they pop up and you might make a buck or lose a buck, getting whipsawed as he talked about. But when they're moving down, you're certainly not losing money. But when they're moving up, they might go up, might go down. But when they go up, they have a very good chance that they could go up for a long time. Where did he talk about fundamentals? Where did he talk about PE ratios? Where did he talk about EBITDA? Where did he talk about any of this? Nowhere. You know what's coming. He didn't talk about any of that crap because none of it matters.
Only price pays.
Only price pays. And he figured this out like 1,000 years ago, back in the Stone Age before computers. So we're just going to clip through this a few more times. I like listening to Tom Basso. He's so chill. I try and take... Tom Basso is known as Mr. Serenity. And I really try and take a lot of his cues in the way that I trade. And it's fun to hear him say the same thing that I say, because these are timeless principles that always work. Take a risk. See if it works. If it doesn't work, know where that risk is at and get out of the way. At the end of the day, that's really all you got to do. I don't know if I can find that exact spot that he said it, but I mean, basically he said, buy anything on any day. And just know where to get out.
Every major move, because sooner or later, you're either going to, if the move's going against you and you flip the coin wrong, let's say, you got...
Oh, this could be it. Hang on.
Always going to... Always the next morning at... Right.
How is that?
By the way, I had more hair back in. Screw that young Chris from 2021 who didn't realize just how much hair he had back then.
More important than the profits.
Well, I ran a study back at Trendstat Days that took a random number generator, and we flipped a coin every afternoon, and then we would buy on a heads and sell on a tails the next morning at market. And then we would put a ATR, average true range volatility based stop behind it.
Wow. Where does that sound familiar from? Dude, at some point I will be a market wizard. I am not to his status yet. I would still consider myself an apprentice, but one day I'll be up there amongst my peers.
and we would trail it. So as the market moved up, stops moved up. Eventually, you're always going to stop out. When you stop out,
Eventually, your exit signal will be hit. It's a guarantee. But in the meantime, let it go. Oh my gosh, this makes me smile so big.
you flip the coin again. And heads, you buy, tails, you sell. So think about that kind of math for a buy and sell engine. And you're always going to catch every major move, because sooner or later, you're either going to, if the move's going against you and you flip the coin wrong, let's say you got tails and you went short,
Mhm.
but the market went up, you're going to stop out
Right.
fairly quickly, and then you're going to flip the coin again. Sooner or later, if you have a big long trend, you are going to flip it heads, you're going to be in on the buy, you're going to catch the trend, and it's going to make you a bunch of money. But because every time you
He's saying exactly what I tell you every day.
ran one of these studies through a whole bunch of different markets, through lots and lots of years of time, you would come up with a different result. We would run 1,000 run batches. So we'd go through and be flipping coins and moving stops 1,000 different runs, and then we'd average all that information up and get statistics off of it. Every time we would run it, 1,000 cases, it on average would make a profit. Now, if you didn't manage the size of your position while you were doing it, you didn't make a profit. The difference between with a random number buy sell, or actually a buy sell engine that would get you into the trade, so the entry, which is what everybody's always obsessed with, would not make money flipping a coin without money management and risk management. But with the same exact formulas that I put in my book, Successful Traders Size Their Positions, Why and How, I think I called it. Thousands of copies have sold. Simple junior high school math: add, subtract, multiply, divide. Managing your size of the positions made the difference between a slight profit versus a slight loss. So to us, it was a pretty clear indication that you had to do a good job of your position sizing. Larry Hite said it in his chapter in Market Wizards: you have to make your bet sizes the same. And I don't think he was referring to just simply the dollars. If you're going to buy X dollars of Amazon and X dollars of some, 70-cent stock, they're going to have very, very different characteristics. You've got to figure out what kind of risk are you taking on in both of those positions, what kind of volatility are you taking on in both those positions, and make those bet sizes the same. That's where you start getting into risk and volatility sizing of your positions. And I think, we did that at Trendstead for most of our career, and that's probably why we survived 28 years when many other CTAs disappeared.
Yeah.
Dude, that's so cool to hear. And I've showed you this several times. You can download this spreadsheet in the VIP Investors Toolkit in our Discord, how you can size any trade, right? You could put qubits, QBTS, you could put NVIDIA, doesn't matter what you put in there. The formulas are the same. The principles are timeless. When you size based on the volatility, you have the same dollar risk in your portfolio. When you size based on volatility, you can have a share size of 174, or even 2,500, or even 4,500 of this one, but yet the risk to your portfolio is the same. And I just want to watch this video again, actually. Oh my gosh, it's so fun to hear. And isn't it great? Type an MW for Market Wizards in the chat if, when I pull out these little clips from here and there, that this is useful to you. Because to me, even though I'm seeing myself from 5 years ago and probably 50 pounds ago at that point, but he definitely had more hair, screw that guy, I think that this is super useful. I think that this is great. Rob asked a very good question. What is ATR? So let's go over to the charts and we'll talk about ATR real quick. ATR is an indicator you can add on pretty much any chart. It's called the average true range, and this gives you an idea of how big these movements are. So we're looking at SoFi right here. SoFi, when it peaked right up here, the ATR, the average true range, and I just used the default 14, was at around 95 cents. And then before this big move up here, it was at 34 cents. So the volatility was 3 times higher up here than it was here, which means to have the same position size in terms of dollars risked, you would need to have a 3 times smaller size than here. But here's the thing. When people hear volatility, they get really like, oh no, I don't want volatility. This move right here was when volatility grew, when volatility expanded, right? Volatility is your friend. Volatility is exactly what you're looking for. Otherwise, it can be dead money. Volatility is what you want in a move. Dead money sucks. Nothing's actually happening. So yeah, volatility shows just how big that's expanding. I have to sneeze, but I'm gonna try not to sneeze on screen because I think that's embarrassing. I'm gonna see if I hold out here. We got some MWs in the chat. Lynn even threw an MH. I'll appreciate that as well. But yeah, I'm so glad that I can help you guys with this. A 7, Tyler. That definitely deserved a 7, my friend. Ozzy Ian says me. I'm sure the autocorrect got you on that one. I get it. Yeah, cool. I'm glad that this helps. Architect Ray Ray says, I love Mark Minervini. I do too. Mark is way sweeter than you would ever think he is. Like, he is a really, really big teddy bear. It's the truth. He probably doesn't want to admit it, but he is like an ultra sweetie. Currently reading his books and watching all of his interviews. Be sure you watch a few of them that are over on my channel. I accidentally doubled them up in this playlist here, but there's a couple here. Maybe 3. Yeah, there's 3 videos there. But either way, Mark is a sweet guy. You'll love those. Knight says, in interactive brokers, I don't have a half an ATR. Well, you're going to have one ATR, more than likely. You'll have an ATR. That's just a regular indicator. There's nothing fancy about this indicator here. It's not like order blocks. Just a regular indicator here. But if you don't have it, I'm really not sure about that. You could probably find it on a different charting platform. You don't need TrendSpider. TrendSpider is hellaciously expensive. You don't need that. But half an ATR, you're gonna have to do math. I mean, I still do the math. You see me do the math. If it's 94 cents, then I'll, just throw up a calculator and say, what's 94 divided by 2? 0.94 divided by 2. So half an ATR is 47 cents. So you'll get it. I know you can get it. Rob says, thanks. OPP gang. I like that. OPP gang. We give me the OPP gang. It's awesome to see Market Wizard Tom Basso in your Rolodex of interviews. I know. I only made 2,000 videos on YouTube before you heard of me. Just putting that out there. I am as open book as it comes. Dustin, that bet sizing formula spreadsheet made me understand so much the last few days. Cool, man. I'm glad. And this really is so important, right? Now, of course, I can't do option pricing in here. But the way that this calculates, and it's by design supposed to be less than 5%, because you're probably doing the math and you're like, wait a minute, Chris, if I did 100 and 5%, shouldn't that be 5%? 5,000? No. By design, it's meant to be smaller. You can work with it, right? You can say like 10% or whatever the case is to get it up to there. But I would really highly encourage you to keep it small. But anyway, this value here, the total risk, is just the difference between the current price and the half ATR price. So if we're long or if we're short, doesn't matter. It still does the calculation, it just flips it, right? So if I flip it over here, now it says half an ATR. If you bought Tesla at 248, half an ATR is at 237. In fact, we could probably do it like this. Yeah. So your half ATR value is either way. And look, it's a free spreadsheet. You can get it through Outlier, but it's meant to help you. It's meant to make sure that you have appropriate position sizing. Meant to keep you in the game. Larry Hyatt, his quote is, you have to bet to play the game, right? But you can't play the game if you've lost all your chips. Which means you have to take risks to be involved. But if you take risks, know where you're going to get out so you don't get wrecked. Nobody gets a 7. Can we get a bullhorn? Nobody gets a bullhorn when they ask for it, Richard. Except for you, my friend. There you go. Use TradeView for free and get it. When's Chris going to do a collab with Minervini? Dude, I don't know. I text him. Find out. But he did. I already did. MW. Nico says it is an interactive broker. It's very cool. Weeble. Senior Wahoo. Only 2K. only 2,000 videos. I know, only 2,000. Jim made it. CMAC, JMAC. I noticed that one of the two HER formulas need to be flips. It looks like they're backwards for long and short. I don't know. Shoot me a message in the Discord and maybe I can fix that. But it should be good. I've used that same position size and spreadsheet for years. Luca Tubo says, if you see a contraction volume and volatility, does it mean the market is accumulating and preparing for shooting up? I'm out of my short in Starbucks. No money lost. Okay. That's a good question. We'll look at this and then we'll go to the video in mind today. So Starbucks. Yikes, dude. Yikes. At least you were short it, right? Yikes. So we haven't seen a contraction volatility yet. Volatility you can measure with ATR. But let's use this as an example right here, right? Mark, one of his strategies, he calls the VCP pattern. So you could actually apply it. This is a decent example. So 1, 2, 3, 4, 5, 6, 7. So a break over this point here would be considered a VCP break. Now, Mark may not agree with that, but I'm using this as an example here. Did it work? Yeah, it did. And if you trailed your stop up, you could have made some money on it. It wasn't a huge break. But knowing where your stop out is important. Then again, it did move on later on. You see that. And then it ran up into these order blocks and pushed back down. So I am not a huge chart pattern guy. It is not my thing at all because I like math. Because what I just did right there, somebody could look at the exact same chart and say, no, it's a bull flag cheesecake pennant. Don't you know, Chris? And I'm like, what do you mean it's a bull flag cheesecake pennant? And they're like, duh. Don't you see the bull flag cheesecake? I'm like, huh, how about that? Chart patterns, in my opinion, are very, very, very subjective, exceptionally subjective. And because of that, I don't like them. I like data. I like moving averages because they're just data. Anyway, let's get to today's video. I'll probably replay this entire thing again because I feel like that was a lot of really good content, especially with Tom Basso. This video is called, If I Could Only Invest in 5 Stocks in 2025, I'd Be Buying These Nonstop.
Rocky, with a new administration coming into office, the announcement of tariffs and trade wars brewing, inflation still shaky, and overall, just a lot of uncertainty in the market. Right now, there are some super solid deals in the stock market, and I'm buying up 5 stocks like crazy this year in 2025. On this list is a totally new stock that I just started adding to my portfolio as of this year. I already announced it in my Patreon group, so if you ever want to get in on the inside scoop and hear about things before I throw them up here on YouTube, go ahead and check out the link down in my description and come join the group. For this video, I'm going to give you my picks in order of least risky all the way to the most risky. Higher risk should mean higher reward, but when putting together your portfolio...
What'd he just do? You put it in the chat. What was the most dangerous word in finance that he just said? What was the most dangerous word in finance that he just said? David is right. Is there something wrong with my tech analysis abilities? Because do I see a horse? Exactly. I can't do that. The cheesecake patterns. Yes. The hell with moving averages. Dude, I can't get it. He said should. He said should. He said should. Professor G, you know this. That is the most dangerous word in finance. Why? Because should anchors you to something. It should go up. It should turn around at this point. It should stop going down and go up from here, right? When you declare a should, you're telling the market what it should do rather than letting the market tell you what it is doing. Senior Wahoo said, I watched this last night and thought to myself, Chris won't like this video. Here we are.
Make sure you understand which ones are the higher risk. My name is Nolan Govea. My students call me Professor G, and I made this channel to make investing simplified. So first on my list is actually my largest holding as far as individual stocks goes, and it's one that I've been buying up like crazy even before this year, but very much specifically because of this year. Most stocks are way down, but this one's holding steady and even growing because Warren Buffett is the king, and this one is Berkshire Hathaway. Berkshire Hathaway is a massive holding company that...
Yeah, let's go look at brk.b. And then in Outlier, you can look it up at brk/b. Do that right? Yeah. So we got a sell signal here in Outlier. You can see just how greedy it's gotten. It's at an 81 out of 100. The financial sector has been getting a lot more fearful. This one, the fears of the greed is kind of evaporating just a little bit right now. a decent buy and sell right there. Let's look at our performance summary here. 80% following the outlier buying signals. That's not too shabby. Not too shabby at all. Let's look at the analyst ratings real quick. No analyst ratings on this one. Okay. But yeah, Berkshire Hathaway definitely has had some strength, especially while the market has been very weak. And you know, honestly, I can't complain about this one. I actually like Professor G. I like his content. I think he's a lot more chill than some people with their most dangerous word in finance, which is AMD. But if I were looking at this today, would I get in this today? No. Reason being is that while it does have the outlier trend template being bullish, right? Let's look for a green light right here, right? When's the first time it closed under the 10? So right there. That would be a red light. And then we got a green light literally the day after that. Green light meaning a close over the 10 EMA. And then it has not closed under at any point until right here. Till right here. So how much of a gain was that just from that one red light, green light? 6% gain. I'll take that. Take that every day. Would I get in it right now? No, because it does have this order block right here. And that order block could be difficult to get through. But dude, I can get behind this one. It's rare, but I can get behind this one.
That's been run by famed value investor Warren Buffett since the 1960s. It owns a variety of well-known private businesses and has significant minority interests in public companies such as Apple. Berkshire has a massive amount of cash on hand and is waiting patiently to deploy that cash at a time that Buffett believes he can find value in certain businesses. Over the past 12 months, Berkshire Hathaway has outperformed the S&P 500 by 9.45%, and over the past 20 years, Berkshire has outperformed the S&P 500 by 352%. The current price of BerkB is right around $493. It has a strong buy analysis on investing.com, and it has a market cap of over $1 trillion, and has a very favorable PE ratio of just 10. One big question that I get is, yeah, but what happens if Warren Buffett passes away, which he is in his mid-90s? What's going to happen to the company? And I believe that he is an even better leader and businessman than he is an investor. And he's been teaching the people that are going to be taking over for him how to do this and has been guiding them through for the past decade. So I think it's going to be just fine. And I think we're in great shape with this company. And right now, I'm actually very interested. What are a couple stocks that you're buying in 2025 and that you've been investing in heavily? Go ahead and write that down in the description down below. This next stock is my top AI pick. Investing in AI has proven to be profitable, with companies like Nvidia, Apple, Microsoft, and many more showing substantial growth. So definitely investing in AI stocks is a great move for your future, but what about investing in your career? Take the first step now for free with today's video.
Shut up with your ad. You got me on that one. All right. I was like, okay, what's it going to be? Oh, damn it.
Favorites in the world of AI, but it doesn't just encompass products and services within just AI alone. It's also the second safest or least risky company on this list. Microsoft stands at the forefront of the rise in artificial intelligence as a transformative force in the global economy. The tech giant was a pioneer in the field and an early investor in OpenAI, the group behind the chatbot ChatGPT. That partnership paid off big, allowing Microsoft to quickly integrate AI tools across its product and services ecosystem and capitalize on strong demand for AI solutions as a major growth driver. One huge thing in the works for Microsoft that many people don't even know about is that it's debuting a new chip to handle quantum-level processing tasks. Majorana 1 will assist quantum-level computers to become capable of solving meaningful industrial-scale problems in years, not...
All right, let's take a look at it. So let's look at the performance summary and outlier here. Outlier, 79% returns, not so bad. So we're looking at it right here. Of course, it did get this buy signal, which wasn't the best buy signal we can see right there. So of course, always make sure that you have not just one data point, but many other data points to go with it. One data point that would have definitely got me to start thinking maybe I shouldn't be holding Microsoft is the fact that it's been getting more and more and more fearful. In fact, it's down here at 19, a fear score of 19. And the tech sector, same thing, getting more and more fearful here. So when I look at a stock like this, this is not one I want to own. Not at least yet. Not at least yet. And man, I tell you what, Jeremy and Professor G could recommend the same stock, but it's the way they go about it that is so different between the two. But yeah, to Nico's point, Microsoft has met our old friend, the monkey hammer. Yeah, so to that point, I would not be interested in it yet. I would not be interested in it yet. In fact, I remember this was way back, 2022. And it was a YouTube channel I watched in 2022. And this person, it had to have been somewhere around here. I think it was like at 280. The price was around 280. So let me give you perspective of where that is. Let's say it's right here. 284-ish. And I remember hearing this channel talking about, don't you want to be the guy who bought Microsoft at 280? Don't you want to be the guy who bought Microsoft at 280? And at the time, I'm like, no. I mean, we're struggling right here. We do have a bit of a bull run right here. But, you know, a couple of days later, that went down a lot. I mean, it peaked at the end of 2021 and went down 38%. And it's like, you know, I would love to be the person who buys the stock at whatever price. I'd love to be the guy who bought Amazon at $5, right? But that's not realistic. That's not realistic. Microsoft did bounce back. And if you wanted to be the guy who's buying it at 280, you could have waited until it got on the other side of 280 over here in April of 2023 rather than August of 2022. Save you like 8 months, saved you a lot of hair off the top of your head, maybe even saved your marriage, and yet you still would have got in at the exact same price. And that's the thing that I just don't get. If you're buying it on the way down, you're asking for trouble. You don't know how down that's going to go. It could have gone down to 180. Don't you want to be the guy who buys it at 180? I'd rather be the guy that bought it on the way up. That's the way I look at it. And then they went up from there. So if we're looking at it right now, same thing. Do you want to be the guy who buys it at 380? I mean, if it's going up from 360 to 380, yeah, sure. But when it's coming down, when it's crashing down from 400, smashed through 390, went down to 380, I'm not interested because I don't know. That's a lot of risk on the table right here. But let's see what he has to say. Maybe he'll talk about risk.
Not decades. According
So since Skinny Buff Guy's leaving, we have to talk crap about him right now. Everybody in the chat, throw a poop emoji. I don't know if I can do that. Can I do a poop emoji? No. Everybody throw a poop emoji in the chat just for Skinny Buff Guy because he decided to leave. And maybe he'll see this next week.
to Wall Street analysts, Microsoft is forecast to achieve a revenue increase of 13.1% for 2025, followed by a 14% pace in 2026. The earning per share estimates are also robust, expected to reach a record $13.16 this year, up 11.5% from 2024. The bullish case for the stock is that the company can ultimately outperform these targets, particularly in a resilient economic environment. On investing.com, it shows that Microsoft is currently trading right around $396. Its market cap is right under $3 trillion. The PE ratio is only about 32, which is low for a company like this, and its fair value, as assessed on investing.com, is at $401.23. So right now,
dude, who cares about fair value? What the hell does fair value even mean? Fair value is, hey, I want to make a deal with you. I want to buy Microsoft today. What's the value? Well, it's 388. But what about 401? I mean, you can buy it at 401 if you want to, but it's selling for 388 today. Nah, I'm good. What? I don't get that.
now means the stock is undervalued and on sale. Next on this list is one that's been on major sale. It's one that's actually been one that I've been buying since last year, and I've been continuing to buy like crazy this year. This one's called Alphabet, or Google, and like I said before, it's on major sale. It's currently trading at a little over $173, but that's down over 10% in just the last month. The PE ratio...
Okay, if something's down 20% in the last month, that is the thing telling you people don't want to own it. And here's the thing. Professor G, you probably got more money than me. I don't know. This is not a banana measuring contest. But at the end of the day, if you don't have other people also buying that stock, if you don't have everybody else putting their money behind it, you're going to be the one dude right there with a deer in his eyes headlight. Or headlight and his deer in his, you know what I mean? And you're like, oh my gosh, I have to buy it here. Bro, no way. Bro, no way. Look at it going down. Right. Fear value of 25. The tech sector getting way more fearful. Let's go to Goog. On sale. Yeah. Oh, wait a minute. Wait a minute. Wait a minute. Let's do some analogies here. Let's do some analogies here. Okay. All right. Might have to pull out the old jacket salesman analogy for this one. Imagine that you need to go to the Men's Warehouse and, or you know what, we're fancy. Let's say you need to go to Brooks Brothers. Let's say you need to go to Brooks Brothers because you got some Easter pictures coming up and your wife is like, listen, Chris, you can't wear a black jacket in our Easter pictures. And you're like, okay, fine. So you go to Brooks Brothers and you're like, okay, how much is a jacket, sir? And he goes, well, hello, welcome to Brooks Brothers. Today's jacket is $207. I hope that is a good price for you. And you're like, that's a bit expensive for me. I don't know. Maybe I'll come back in a couple weeks. And you come back in a couple weeks and you're like, oh, sweet. It's $167 for the same jacket. Oh, yes, sir. We have our semi-annual, everything's on sale. And this jacket is now $167. Well, you're a genius, right? Unfortunately, assets do not work the same way as consumables. I guess a jacket would be in consumables, right? If the asset value is going down, that means people don't want to own it. Think of it in terms of real estate. This is a new area. They just put a salt grass in. You're super stoked. There's a new Home Depot around the corner, right? New schools are opening up. Everything is great. And then something happened right here. Maybe there was a drive-by shooting one night. And then everybody finds out, oh no, we've been harboring like fugitives over on that corner, over there on Walnut Street. That whole Walnut Street's cracked out over there. And then everybody's like, oh, I can't live near Walnut Street. And they're moving out. And the whole city's like, I gotta get out of here, right? And then asset prices are falling day after day after day. There's a huge difference between these two things, like getting a jacket on sale versus buying the crack house. Google, while it may be a great company, doesn't necessarily mean it's a great stock. And if you have to buy it, if you have to buy this, find the time when it's going back up with your 10 over the 20, price over the 50 on your outlier trend template, like this. Because you're not going to get paid on hopes and dreams on this. And if you're buying the crack house, thinking that everything is going to be great, it's all going to go up from here because they just put that Chili's around the corner, right? But the Chili's already shut down, right? They abandoned construction on it because they're like, everybody's moving out. Everybody moved out of Walnut Grove. Little house on the prairie, there's nobody left on the prairie. And you're the last guy trying to buy up houses on the prairie.
Ratio is ridiculous at just 22. That's the PE ratio of a value type company, not a tech giant with a market cap over $2 trillion. The main reason I'm into Google is their absolute dominance and
Laura says, I got out of Google a month ago. That's a random guy named Chris.
and they are the #1 leader in a vital category. Google has 75% of the internet search market and 85% of the mobile search market. Additionally, search on the internet continues to grow as it becomes a more integral part of people's daily lives on a global basis. A massive profit driver for the company, this is the main ingredient in making Google a safe investment. Right now, Google's down because of the lawsuit and because people think that ChatGPT is just going to come in and just take everything away from this search engine just because they have this new AI-powered machine. Regulatory concerns have been weighing down Alphabet stock, with the Justice Department planning to break up Alphabet and force the company to divest the Chrome browser and Android operating system. Reportedly, Google met with Trump administration officials to push back against its proposed breakup. According to Google, the proposals made by the Justice Department would be detrimental to the US economy as well as national security. I'm not too worried about this. Eventually, they're going to have to pay a fine or they're going to have to divest in a couple pieces of the company, but the rest of the company is going to be humming like crazy, and we're just going to see that cash flow continue to pile in. Also,
the cash flow may continue to pile in, but until that cash flow gets put into these stocks, it doesn't matter. It doesn't matter, Professor G. You should know this.
So Google's raised its game in AI, so I'm not worried about ChatGPT taking this over. They will compete and they have the money to do so. For example, Google also unveiled new AI shopping features earlier this week, including Vision Match, which was previously run as an experiment in labs. According to Google, the feature lets you describe any garment you have in mind and then uses AI image generation to show you a few ideas of what it could look like in similar shoppable products. I think the sky is the limit for Alphabet, which owns Google and YouTube and a bunch of other huge companies.
See, right there, he's anchored emotionally to Google. No, I shouldn't say. I'm not speaking for you, Professor G. It sounds like you're anchored emotionally into Google, and you're using the fundamentals and you're using the news to justify your emotional attachment to Google. And Peregrine actually said it right. You know, one of my things is saying all stocks are bad, and every once in a while they act right. Videos like this say all stocks are good, and occasionally they act wrong. That's a really, really well said, Peregrine. Good work there.
These are continuing to grow and outperform, and right now it being on sale
By the way, is it just me or does everything on the wall look crooked and it's driving me bonkers? And that may be an engagement hack that I should try because I'm just staring at everything on the wall like everything is slightly off kilter.
I can't say enough about this one, and I'm definitely buying it while it's down, while everybody's scared and everybody's retreating. This is the time to be investing in a company like
Ooh. This is barf worthy. Hang on, let's go back just to show what barf worthy looks like.
continuing to grow and outperform, and right now it being on sale. I can't say enough about this one, and I'm definitely buying it while it's down, while everybody's scared and everybody's retreating. This is the time to be investing in a company like this.
I could not disagree more. I bet you Tom Basso also could not disagree more. Dave says, thanks for that. Now I can't unsee it. Dude, now this is the wrong time. This is what Tesla looked like at one point. Like, let's give a little perspective here. At one point, Tesla was only down a little bit, right? Maybe 15% or so. But now it's down 50%. 50%. And you're telling me that if it goes down, now's the time to buy. F no, dude. F no. I mean, you might be having the semi-annual 20% off sale, and then they come out with the next, it's luck of the Irish sale, and we're going to discount it by another 30% on top of your 20%. Clearance signs everywhere at Brooks Brothers. Maybe then's the time to buy.
The next stock that I'm buying right now nonstop is definitely one that's
exactly.
much more risky than any of the three that I just went over. This next company has significant contracts with the government for about half of its business, and then the other half of the business, it works with businesses and large corporations and even mid-sized corporations and provides a product and service that literally everybody needs. This company is none other than Palantir. The reality is that the AI investment cycle is just getting started. In the past quarter alone, companies announced more than $325 billion in AI investments, and that's just for 2025. Apple announced more than $500 billion in planned AI spending over the next 4 years. Granted, much of this planned spending will go to chip makers like NVIDIA, who produce the powerful GPUs that power AI applications. Nevertheless, a significant portion of AI spending will go towards software platforms like Palantir's AIP.
We're going to skip through this video because it's taking ages. But, I mean, again, all of these reasons can be why a company is great. But that doesn't mean the stock is great. Palantir, from its high to now, is down 30%. Sure, it is on sale. Absolutely. But that doesn't mean that the asset value itself is going up. And until the asset starts increasing in value, you're either going to have dead money or you're going to be losing money. That's why I say all stocks are bad. Even Palantir's bad. But every once in a while it acts right. And it totally acted right for a minute. Right? Going from 20-ish, or man, I mean, it came like way up. Went up hundreds and hundreds and hundreds of percent. But that doesn't mean it will continue to do so. But then again, like Tom Bass would say, buy anything on any stock on any day, it doesn't matter. Just know where your risk is at. Professor G. Let's go to the next one here.
Last company stock is one that I just started buying up in 2025, and it's one that's had a bit of a drop since the beginning of the year, and I've been waiting for these prices to come down because I've liked the company for so long.
Okay. I don't know where he's going, but if he's waiting for prices to come down, let me see. Hymns. If he's waiting for prices to come down to start accumulating shares, that's fine. But, for example, right here, on Hims, right at $33, probably was like, oh, that's so freaking expensive, I can't buy it here. But you can still get it at the same price. Crazy enough, if it is actually going up. So let's see what it is.
And so many people, YouTubers, bloggers, analysts have spoken so highly about this company, but I just didn't like where the value was. And right now, with it being so low, I'm taking a buy. Investing in this company would be like investing in Apple in 1976 when they made the first Apple computer, the Apple I, or maybe even a bit.
I hate these comparisons. I hate predictions. I hate comparisons because it doesn't matter. None of that matters. We're not in the business of predicting. We're in the business of reacting to what the market is telling us. But of course, he's going to try and make it sound like it's the greatest investment of all time.
later, like in 1984, when they made the Macintosh computer. Who knew that 40 years later, the world would be run by all their sticky products? It had to start somewhere, and had you invested back then when they were just getting started, you'd be rich today. This company isn't just getting started today, but it is just at the tip of what it has as far as potential for this type of company, and this company is called SoFi. They're in the financial services sector, and traditionally...
Oh no, he went to SoFi. He's a SoFi bro. Oh, oh man. Oh man. I can't believe Professor G went to SoFi. Look at this fear value down at 11. But then again, it can snap back. The further it goes, the more likely it can be to snap back. I can't believe SoFi was actually one I was going to use as a minute ago. God. See that little hair? I've lost all this hair because of people like him. Ugh. Why wouldn't I be hating on SoFi? SoFi, there's this cool thing called a market cycle. SoFi is in a stage 4 downtrend. Stage 1 is consolidation. Stage 2 is this big, beautiful uptrend that everybody wants. This is the one that they buy hoping that this happens because they don't have a strategy. They're just hoping. Stage 3 is the top where the moving averages start crossing around. Stage 4, this is where so many stocks are at these days. Dude, long-term, short-term doesn't matter. Long-term, short-term doesn't matter. Only price pays. And if the price is going down on a stock like SoFi, this is stage 4 downtrend in obvious detail. Will it stop right here and then make a new stage 1, stage 2? Maybe. But bro, I was covering this all the way over here, and I was getting so much hate from SoFi bros because I literally made a video on this day because SoFi was getting all the clicks. I was like, SoFi is in a bearish trend right now. It is a fact. And they're like, oh, you're so stupid. Nah. And then the trend changed. And I got lots of comments that are like, oh, look at SoFi now, you idiot. Dude, trends change, right? And in fact, that right there would have been a green light to me. You've got your 10, 20, 50 crossed up, a green light. But a couple things happen. First, I don't trade through earnings. And this is the reason why. This huge sell-off of 10, 12% is an exact reason why I don't trade through earnings. Can it go up? For sure. Ryan, dude, that CEO, I mean, here's the thing. I don't like sports. I don't watch sports. But if you equate to betting on the CEO, it's like telling LeBron, hey, LeBron, or telling other people, hey, I like this team because of LeBron. That's cool. LeBron doesn't care anything about you. LeBron doesn't care if you breathe, right? The CEO, no offense, Ryan. I'm just trying to use some examples here. No offense. We can be friends. We can share a beer later. The CEO, he's going to do what he's going to do. But I'm telling you right now, what he's doing, what that CEO is doing, the market don't like. And then it got hit by this order block up here, came back down, and is in a very, very, very strong downtrend. And I can't believe Professor Jesus SoFi, bro. I saw so many people. I would say SoFi is a meme stock, and they'd be like, no, it's not a meme stock. It's going to change finance. You're right, Ryan. The whole market is doing this. You're right. And in fact, 40% of the market, or 40% of a stock's move is due to the market. 30% is due to the sector. And the last 30% is due to the stock itself. So yeah, you're totally right. And because 70% of the stock's move is working against a stock like SoFi, even if it is the best stock in the world, it's being held down. So yeah, I can't believe Professor Jesus SoFi, bro. I don't even want to hear the rest of this. But you know what? Who am I? I know I'm some random guy on the internet. What do I even know? My name is Christopher Yule. I've twice been awarded top 100 people in finance. I was mentored by 5 of the market wizards, the best traders of all time. I've been successfully trading since 2009. And this is where outliers like us save time, make money, and start winning with less risk together as a team. Now, I want you to rank this video. I want you to rank Professor G. And of course, go ahead and subscribe if you haven't already. Professor G, my friend, I think he and I would actually be good buds in real life. But this one, I am not friends with. I think somebody said this is a collection of stocks that have been monkey hammered. So where are you voting for it? 6 for style, 2 for content. I like that. 2s, 5, 3. We got a 1 over there. 2. It's me. A generous 2, 1.5, 4, 2, 3. 2, 3. Oh yeah, okay. I'm gonna put it at 2.5 because I feel like Professor G, he's smart enough. I don't know all of his details, but I know he teaches finance, right? In some way, shape, or form. And dude knows when I talk about how if you're averaging into a stock, you get the same average price on the way back up versus on the way back down. Dude knows that he's not going to get paid until it starts going back up. But maybe Professor G, maybe Nancy's his aunt. Maybe it's great Aunt Nancy. Maybe so. I don't know. Anyway, I do know this. I am very stoked because it's not only today's member highlight, but it's also a weekly winner circle. So we have 24 names on the weekly winner circle. What is the weekly winner circle? This sounds fun. Well, it's really cool. If you go into our Discord and you go and you share your big wins, we actually will go through and read these. It's crazy to hear, but we do read these, right? And I want to share a couple of these, right? First, P. Taylor, I hope he's watching right now, says, my first use of Outlier was getting out of the SPY. I saved $500 on the drop, already paid for itself. Knowing your exit points is more important than your entry point. Well said, my dude. DM79 says, first huge win for me following everything I've learned from Chris over the last 2 to 3 weeks. Nearly 600 pounds on qubits, watched the 10, 20, 50 order blocks, etc. Just took out the profit, and now it's on the way back down. Not the top, but amazing. And you know what? You'll never get the top, and that's okay. QBTS. But he was able to make a ton of money. So I'm super, super stoked for him. QBTS is like flying today, up 44%. What else? Let me see. Let me share one other story here real quick. Shane's here, says, I started using the 10, 20, 50 to do day trading. I follow the momentum and it's been pretty successful. Exactly. Danish guy or Danish dude. I think I said, no, I haven't read this one yet. I can now do status after joining the Outlier community 1 month ago. I retrimmed my portfolio based on new knowledge. I'm only buying stocks, still learning, no options, no shorts or any other exotic stuff, but basically went from being heavy in tech and buying the dips to actually accepting being somewhat in cash and having a lot of in and out and different stocks, the 10, 20, 50 lessons learned and sticking to my exit point when a stock closes below the 10 EMA, a red light right there. I'm out, learned a few times initially that closes below, meaning the final hour of trading. Yes. For me, 6% this month is an absolute win. So 6% this month, outstanding compared to Q or any other index, by the way. Yeah. Being up 6% while the market is absolutely shrinking, dude, I'm so happy for you. So the way that we do the weekly winner circle is we go through and we write down who has posted in there this week. And we let you guys basically compete, be in a lottery for a $10 Amazon gift card. And while I know it's not going to do much more than buy you a new book, I would definitely recommend buying you a new trading book. The point is that we wanted to hear from you how you are using Outlier and those wins. So we have 24 contestants today, and so we're going to let the random number generate the winner. Right, I've already got you guys. If you want to try and put your last minute entries in, it's far too late. I'm sorry, beat you to it. So we go from 1 to 24, and whoever this number comes up is a lucky winner of a $10 Amazon gift card. It is in 3, 2, 1. Number 16. Number 16, come on down. That's Danish Dude. All right. Congratulations, Danish Dude. Let me reply to here real quick. At Danish Dude is the winner of this week's weekly winners circle. Congratulations, Danish Dude. Outstanding work. Everybody in the chat type dude to say congratulations. Just type in the word dude to congratulate the Danish Dude. I'll do it too. D-U-D-E. Congratulations, Danish Dude. All right. So super, super stoked. I'm so glad that you all are outliers and participate in that. That is so fun to be able to do this with you. So be sure to share your stories in the Discord, and hopefully next week, actually the week after, because I'll be on spring break, we can do this again, and you'll be the next lucky winner. And of course, the first rule of Outlier is you tell everybody about Outlier, right? Let's go, dude. Everybody's saying, dude, outstanding, outstanding. Congratulations to dude. Yep. All right. Now, let's take a look at some potential setups. Now, one of the reasons why I wasn't in a big rush to go through this today is if you are going on vacation, do not trade. I can't tell you, do not trade. The best example I could ever give you was we went to Disney World one year, and this was in the middle of when I blew up my account following the gold trade. And I remember specifically looking out the window of our hotel. It was over Disney Springs, and I could see this hot air balloon thing going on at Disney World. And looking down at my phone and looking back up, and just like this heavy sigh, like, oh. I'm thinking to myself, I did it again. I blew up my account again. And of course, this was long before Outlier. This was long before I had my risk management in place. And I was trying to trade on vacation. So rather than being able to enjoy my vacation, to make memories with my family, the only thing that I could do was look at my phone and be frustrated and get mad at the situation. And then, of course, I'd be like, put that back. That costs too much. So when you go on vacation, don't trade. It is not worth it. Just on the next time you get back, resume your schedule as you would otherwise. But real quick, what is Outlier and how does it work? Be fearful when Uncle Warren used to say, be fearful when others are greedy and greedy when others are fearful. Outlier shows you if investors are acting irrationally fearful or greedy and by how much, allowing you to get into the stock before the Outlier move happens. And if you want to save time, make money, and start with less risk, head on over to outlier.com, where you can save 64% off the regular monthly cost by getting the annual pass, which is just 82 cents a day. And if you're on a trial, just shoot us an email and that you want to upgrade, and we'll take care of it from there. Now, my style of trading using Outlier, I call the golden ticket trading strategy. Now, let me ask you real quick. I have an idea, and I want to run it by you. So in the chat, type a number 1 for yes or number 2 for no. While I'm out next Sunday, the 29th, no, next Sunday, 23rd, would you be interested if I took everything in my strategy from the Ultimate Trading Power Pack, which you can reach over here? Let me go to it real quick. Here. Late last year, I think this was October, November timeframe. I went through and made a lesson on every single thing in my strategy, top to bottom, in in-depth detail. Would you be interested in me putting out a video on that next Sunday? Just a one video, all of this all together. It's probably going to be 10 hours long, 15 hours long, something like that. But you can always come back and reference it. Right? I try and make my free videos better than anybody's paid course. I mean that. So this is something that I'm considering doing. I've already got everything else planned for while I'm gone. But if you're interested, type a number 1 in the chat. If you're like, nah, don't worry about it, type a 2 in the chat. Okay. All right. It seems like we have a overwhelming yes. Okay, cool. So as long as you promise to watch it, Matt, that would be awesome. 1, and get Jeremy to do a Q&A while you're on gone. Okay, cool. I'm interested in number 5. What is number 5? Why order blocks are a trading cheat code. Yeah, that's really good. That's a really good one. Rob, that sounds like a ton of work. It is. It will be. But it's all there for you. Like I say, there will be a handful of differences here and there. We've made a lot of upgrades to Outlier in the meantime. So you might find some things here and there that are not quite the same. But I mean, each one of them is going to be, like, for instance, let's go to this one real quick. This is this is the percent of stocks on the bull list. The percent of, I don't know what date this was recorded. Oh, it was recorded on, it looks like, hang on, it'll tell me there in a second in the bottom corner. Move, get out of the way. I'm waiting on the little status bar to go away. It looks like I recorded that on September 11th. So it was late last year when I put all this together. So you will see a handful of differences here and there. But if this is useful to you, I will definitely put that up there. Yeah, for sure. You're totally welcome. Oh, what will I do without you, Chris? I'll YOLO on some AMD? Dude, do it. Do it. Do it. But just know your risk is at. Chris Ward says, thank you. Cool. I will definitely do that. But it's going to be one long ass video. But you can save it and always come back. So real quick, let's go through what I would have looked at today. With the 10 under the 20, price under the 50. That's where I want to start on the SPY. And that's what we have, right? We do have this pullback here, 10 over 20 or 10 under 20, price under 50. So it's definitely a bearish trend, no doubt, hands down. Number 2, market breadth. Now, this is where I had said for a couple days now, I think we're going to bounce. I think we're going to see a lot of short covering. And what did happen? Market breadth flattened out. It's actually crossed bearish right now, but I mean, they're right on top of each other. They're kissing cousins right here. And that's what we got. We got a huge short covering rally right here. We'll have to see if it continues, and we don't really know if it's going to continue or not because trends can change. But in the meantime, the trend is down while market breadth looks like it's flattened and maybe starting to get bullish. So for me, that locks me out of the master key. We still have a sell signal in the SPY. Market trend is still bearish. Market breadth, we could consider it bullish or bearish, but right now it's kind of either way at the moment on market breadth. So that would lock me out. But it doesn't lock me out from helping you. So no trade setup for me today, but I want you in the chat to put stocks you want to see. Put stocks you want to take a look at. Philip says, definitely, absolutely, please. Lyft got some interest today. Was that you guys trading on my hunch, Mr. Baggins? What's going on with Lyft? By the way, when you put your stocks in the chat, be sure you put like Lyft long or Lyft short. Right here, Lyft is way more of a short opportunity for me than a long. Way more. In fact, this would be a really solid short entry if it didn't have that order block right there. So what do I mean by solid short entry? Let's say, for example, you decided to enter on the close of this candle here. So that would be a 7% move back up to your 10 EMA if that's your trailing stop. Whereas right now, if you were to get in here, this would be a 0.46 move to your trailing stop. Right. So for me, that's a way better short entry than long entry. But order block right here, no surprise, bounce city. Bounce city. All right, let's look at Steve Jones. How you doing, Steve? Let's look at KTOS long. KTOS. Kratos Defense Securities. All right, so we do have a buy signal here. Just came through. Look at the sell signal. I mean, sell signal came out like 3 days before this huge sell-off here. The greed got up to 89 at this point. Crazy, right? And then sell-off huge. The fear got down to 19 and has been coming back. Now, the industrial sector is still looking quite fearful, but Kratos itself is getting a bit more greedy, a bit less bullish. Let's see if there's any order blocks in the way here. KT, hang on, what was it? KTOS. You got your 10, 20, 50 crossed up. So this is green light territory. 10, 20, 50 cross. I would say yesterday was green light territory. So I like that. So green light meaning your 10's over the 20, prices over the 50, and then you've got to close over the 10. That's a green light territory for me. Got an order block up here at 33. So I've got a confluence of signals here. I've got a buy signal. I've got green light. I've got my trend all in the right direction. This looks great. But remember, you've got a weak market, and you've got a weak sector, both of which are going to be working against you on this. But if you're buying something like this and the market does recover, you could see a huge slingshot effect after this. So I like Kratos here. Kratos, I don't know. Where will this mega video be accessible from? From this crazy little website called youtube.com. You may not have heard of it before, but youtube.com. And AskQ wants to look at Microsoft. Are you just like rubbing salt in the wound over there? MSFT of Professor G. All right, so looking at this, we do have a buy signal. And again, don't take buy signals as their own thing. Make sure that you put some other data behind it, right? Let's see if I had the 10, 20, 50 crossed up right there. It certainly did. But of course, keep your risk in check. So it still has a buy signal, and the stock itself is getting way more fearful. We're down at 19. And to that point, we could see a bounce. As I say, the further this goes one direction, the more likely it is to see snapback. So you could see that snapback there. And then, of course, we know what this looks like in SFT. We looked at it earlier. Yeah, this is brutal. And it's got an overhead order block right here. So it's got a lot of room that it's going to be really struggling through. Mr. Vlad, let's look at FUBO long. You got it, dude. FUBO. Okay, so we don't cover FUBO just yet because it doesn't have enough data for all of the fear and greed heat map that we have. So FUBO. Oh, this is a Jeremy stock. I remember this one now. This is a Jeremy stock. So it had this giant move up into order block city, and it made one there. It made a second order block, then came down, made a third order block. FUBO long is going to be tough, dude. It's going to be tough because you're still in a bearish trend right here. Your 10, 20, 50 is still bearish. Then once it gets up to 411, it's going to really struggle. I mean, there are a lot of open orders ready to take FUBO off the table here. So I would definitely keep your risk in check. Keep your risk in check. Mikey Mike wants to look at BTI long. BTI long. It is a Jeremy stock. The first time I ever heard of it was a Jeremy video. All right, BTI long just got the buy signal right there. Just got the buy signal. And this is a great example on BTI. Let's take a look at this right here. When I say you could see snapbacks as it gets deeper into greed, right? It got up to 89 on the greed scale and then snapped right down. So from January 28th, when it was around $39 to $42, this 10% move right there, and then a snap down. So this is a perfect example of what I would talk about. So we've got a green light right here, a green buy signal, I should say. The staple sector is looking greedy still. This is getting more greedy as well. BTI looks pretty sharp. Let's go over here. Yeah, for sure. Earnings. So green light would have come through on this candle. This red candle right here would have been the green light. Your 10, 20, 50 crossed up, it closed over the green right there. Or it closed over the blue. And then there it goes. And there it goes. So to Mikey Mike's point, it actually looks pretty sharp, dude. Looks pretty sharp to me. But just keep your risk in mind. I would start using that 10 EMA trailing stop. Dude. Let's see. Let's look at Intel, INTC. Guinea pigs are cool, wants to look at Intel. All right. So if we zoom into Intel, I saw several people asking about Intel, so I want to go to that one. Again, you can see here, this buy signal, as it got more and more greedy, and then it started to come back down. So as it gets in the more greedy territory, you need to start getting a lot more defensive with your stocks. The sector is getting more fearful, but it's still in a buy signal right here. Let's go to Intel, INTC. This just had some news recently, right? What was the news that came out on it? Anyway, big gap up right here. Looks like it might struggle to get through this order block. 2 days in a row, it hasn't been able to break through the bottom of it down here at 24. Here's a pro tip. Since it did gap up, whatever the news was, a new CEO. Thank you, Rick. I'm going to miss your face, Mikey Mike. This gap up right here, if it closes below this point right here, I would be very quick to get out. That could be a gap and go or a gap and crap. With the new CEO, who knows? Who knows? You're welcome, Mr. Vlad. Darren wants to look at MicroStrategy. MSTR. I always get MicroStrategy and Monster Beverage confused. Is this MicroStrategy? Yeah, it is. All right, so it's still sitting in a buy signal. We've got the tech sector getting a lot more fearful. This stock itself, it's kind of flatlined on fear, around 30-ish. But then again, it looks like it's also flatlined on price. MSTR. Yeah, this one right here is not beautiful to me long. You've got your 10, 20, 50 all across south. So this is bearish to me. Then you've got another overhead resistance here at 320. So this is a tough one for me. But it looks like it might have found a little bottom right here. It might have found a little bottom. But then again, what might happen is it bounces between these 2 points right here. Johnny wants to look at F. F for Ford. Okay. Ford long, I assume. Johnny, you didn't tell me long or short, so I'm just going to assume long. So Ford long, discretionary is getting more fearful. Ford, however, is getting a little bit less fearful. It's up to 40 right now. That's not so bad. Still sitting on a buy signal, so it's still got some legs to it back there. Let's go look at F. I got a lot of bullish order blocks down here that's been propping up the price. Tell me order blocks don't work. No F, I just F'd up. Johnny, come on. But you got your 10 under the 10 over the 20, price over the under the 50. I just messed that all up. Your 10 is over the 20, price is under the 50. So this would be considered a sideways trend at the moment. And he didn't even want to look at it. He didn't even want to look at it and ask you, can you believe this? He didn't even want to look at it. ADBE. Ooh, sell signal came. Huge sell-off happened. February 21st, sell signal. Getting more fearful. Getting more fearful in the tech sector. Let's look at this real quick. ADBE. Oh, earnings. Yikes. Yeah. This is a great example of why I don't hold through earnings, right? Even the best companies, even the best of intentions can get absolutely wrecked when that happens. So, yeah, this is not a beautiful place to be. Let me ask you and ask you. Let me ask you and ask you. What was your plan to get out? Because as you know, I won't make predictions. I won't tell you what to do. I'll ask you, what was your plan to get out? And you don't have to answer. Don't put an answer in the chat if you don't feel up to it. But that's what I would say to you is, what was your plan? Hold yourself accountable. It's okay to be wrong, but it's not okay to stay wrong. Just follow your plan. Follow your plan. Hey, before I go on vacation real quick, if you are an influencer of any size in any niche, we want to work with you. Shoot us an email over at support@outlier.com. And of course, tell me what you're trading in the chat and come back next week after next. Listen, I got all the videos planned out. You don't have to worry about that. There's still going to be tons of content, but it's not the same. It's not the same where outliers like us aren't hanging out together, saving time, making money, and starting winning with less risk together as a team. But you know what? I hope to see you in a replay video. So y'all have a great week, a great weekend, a great spring break, and make sure you click on one of these videos that are popping up right now. And I'll see you in a while. Talk later.
10 over 20 over 50.